Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast, where we're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. I'm your host, Billy Keels, and if you've ever wanted to know how you can use the tools of real assets to create a wealthy mind and live your best life, then guess what? Today's the conversation that you're going to want to listen to until the very last word, because today's guest not only has been in the real estate industry for more than 10 years, he's also been in the high-tech industry in Silicon Valley for over 20 years, which is actually really, really cool. He also focuses on creating strategic partnerships with multifamily operators, which have resulted in increasing cash flow as well as appreciation for his investors. And he's the co-founder of Wealthy Minds Investments. I'd like to welcome to today's show, Alex Kholodenko. Alex, welcome to the show, man.
Thank you, Billy. Thank you for having me here.
Hey, this is so much fun. And you know what? I think this is another thing that I forgot to say that I think is just cool, because when we talk here on the Going Long podcast, we really want to help people feel comfortable and confident investing beyond your backyard. And you've invested in 14, if that is at least the number of states that you have done, in over 4,000 doors, which I think is awesome. So we're really looking forward to learning a lot from you today, Alex. And with that, I want to jump right into our first 2 of 5 questions that I ask every single one of our guests. So first of all, we'd love to know, where is it that you actually live in the United States?
I'm in the middle of Silicon Valley. I live in between San Francisco and San Jose in a city called Belmont, California.
All right, awesome. So I know I led up with Silicon Valley, so you're out in Belmont, which is fantastic. And Alex, what's the most positive thing that's happened to you in the last 24 hours?
Over the last 24 hours, well, we've actually been exploring other investment opportunities, and we're actually pretty close to launching a tech fund. In addition to diversification into real estate, we believe that wealthy individuals should have access to multiple income streams. So we had very positive and interesting conversations with another tech fund management company, and we're exploring partnerships, and we're getting closer and closer to launching one.
Man, I think that is fantastic. So thanks for sharing that with us as well. You know what I find really interesting, Alex, is when we are, those of us that are especially in the high tech industry, we have access to always the kind of the cutting edge of what's happening. And then when we include real estate in that, it really opens up the mind to explore so many different possibilities. And the fact that you're looking at being able to create a tech fund, well, it just kind of makes a lot of sense. So thanks for sharing that with us. And Alex, I mentioned a couple of things really at a high level to talk about you and some of the things that have happened, but do us a favor. Why don't you go ahead and share your backstory in your own words and really highlight some of the different inflection points or real decisions that you have made to get to this part of your journey. And then later on, we'll talk about maybe where you're going. But share your backstory with us, please.
Sounds good. Thank you. So for all the listeners out there, my background is originally from Ukraine. I immigrated more than 25 years ago and started pretty much with nothing. I didn't even speak English.
You're doing well. You're doing very, very well, man. Awesome.
Thank you. And just settled down here in Bay Area because of my relatives who immigrated more than 40 years ago. Met my wife, started a family. I have 2 boys now, and started my corporate career more than 20 years ago. Always been in tech space. I still have a day job. I work for a startup in the software technology space. And 10 years ago, I actually always had entrepreneurial mindset. So I always had a side hustle or a side gig because I realized, for tax purposes, having only W-2 job will kill you with taxes, right? So I started to explore what are the different avenues that I can have multiple passive income streams and reduce my tax exposure. And one thing to another led to real estate, because this is not a rocket science. We all know that real estate is a proven wealth strategy and a vehicle to build wealth. I mean, 90% of millionaires create real estate for their wealth. And after exploring that, I had a deep dive. I'm very analytical. I have an engineering background, so I started to attend a lot of webinars. I read a bunch of books, and my journey started with single-family homes. I bought a few of them out of state. I still own a few of them in Florida. But I realized that this was not a scalable solution, and it required a lot of time and effort in managing even the property management, which I outsourced to somebody else to take care of that. And I kept looking. I explored other real estate investing strategies, such as flipping home, but was not also very scalable. It required a lot of time because I'm a busy guy. I'm a busy professional. I have a very demanding job as well. If you know what I mean, working.
Oh, yeah, I can definitely understand.
With deadlines and quotas and everything in between. And I started to explore more passive investing strategies. So I lent some money for fix and flip opportunity, and I did okay. But then I realized that it was also a taxable event that resulted in a tax bill. So I kept looking, and then eventually I found out about the syndication model, where a group of investors partner in and buy larger properties, which is something that they would not be able to buy on their own. And I got excited about that, did another bunch of research. As I mentioned, I'm very analytical, talk to a lot of people, and I finally pulled the trigger, and I started investing with my own personal funds to kind of test the model and try it out to see whether it works or it doesn't. So I was one of the pioneers that started investing with the crowdfunding platforms when they were just starting out. That was more than 6 years ago. And for the most part, I can tell that I did okay. I mean, some of them did not work out. I did lose some money. Not every deal goes according to the business plan. So don't believe the hype. If you've been around the block long enough, you'll know that you will have some losers and you will have some winners. So on some of the investments, I have doubled and almost tripled my investment. But some of them I did lose money. And I developed a good understanding on the market on how to analyze the deals over the last 6 years specifically. I have exited on probably half of my investments since then. I have explored investing in multifamily, storage, hotels, everything that under the moon in commercial real estate, because I was curious to find out what works and what doesn't. So overall, I am probably in around 50-55 deals over the last 6 years. And about a year and a half ago, a friend of mine and I, we started discussing a possibility to launch our own company, a private equity boutique firm, because a lot of people started to ask us whether they could co-invest in our offerings. And we did that, and then the COVID hit. Perfect timing to launch a business, right?
These things happen.
But as Napoleon Hill says, the timing will never be right. You just need to start where you are, and then you will find better tools along the way. And we co-syndicated and co-sponsored our first deal actually in the middle of the COVID sometime in March last year. We were a little bit skeptical in the beginning because we thought, like everybody else, the world is going to end. But then we realized that people and our investors, including ourselves, are looking to diversify outside of the stock market. The stock market did tank about 30-40%. If you remember, sometime last year when the COVID just hit. And people were looking for yield, people were looking for stable asset that would cash flow from day one, that had an equity upside, that reduced volatility and in fact eliminated volatility at all. And we never looked back. Since then, we have co-syndicated and partnered with other operators in 6 other deals. We invest for cash flow and appreciation. We take due diligence very seriously. We run background checks for our operator. We get to know them. We check references. We do our own underwriting on each deal that we do, and we co-invest in each deal, our own fund. So we put a skin in the game, and we recommend to our investors when we find a deal, we just give them an opportunity to co-invest with us. This is not a very hard sell. We just tell, hey, we're just busy professionals. This is what we do. This is what we invest for. And if you like to come along and invest with us, great. If not, that's perfectly fine. And it seems to resonate with our investors who are busy professionals like us. They don't have time nor desire to fly to different states to check out these properties. And everybody is looking for cash flow and passive income. And nobody wants to rely on just a job W-2 income, right? Because we know how volatile the corporate America is as well. And it's been going really well, and we'll continue to grow. And as I mentioned just now, earlier, is we're exploring and getting close to launching a pre-IPO fund as well, where we provide additional diversification. So we believe in creating multiple income streams and not relying on just a corporate job to create wealth.
Yeah, so I love your so I love your story, man. So you've got a number of things that really resonate, I know, with a lot of the Going Long family. Just the fact of the matter is, you personally have traveled a lot, and you mentioned being able to immigrate, or you immigrated 25 years ago. That resonates a lot with me personally, because I've been in Europe now for 20 years, and I also have 2 little boys. There's this whole thing, though, that I think most people, hopefully they listen to what you said, because especially a lot of passive investors, and maybe we can dig into that passive. And I know you have massive experience on the passive side, so maybe we can pull some of that because we have a lot of people that are here that are listening that are potentially looking for opportunities and to get educated and things like that. But you said you have done between 50 to 55 deals, and you've exited on half of them, so that's a good thing, or can be a good thing. But one of the things you said, Alex, and just confirm that I heard this correctly, that you have not made money on every one of them, i.e. you've lost, correct, or they have not performed according to the business plan. That is correct, right?
Correct.
So when that happens, as a passive investor, you have a choice to either, you can have a lot of different choices, but maybe you can talk us through like what that felt like for you emotionally, to know that you're not performing on something that you thought was going to perform a certain way. Like, what did that feel like? And then secondly, what could you have done differently to minimize that non-performance moving forward?
Yeah, that's a good question. So if you're going to be long around in investing, you'll know that you'll have some doubts, right? Not every investment will perform according to the plan. In fact, pro forma is just pro forma, right? All the projected returns, they'll never go exactly the way you plan them. Very few investment times vehicles that are going to deliver exactly what was in the PPM or investment summary, right? Because it's a business, it's a live business that sometimes goes up, sometimes goes down, and it performs differently every quarter. And how do you feel about non-performing assets? It sucks. You get frustrated, but then you realize that there's nothing you can do. You as a passive investor, and just like me, have no control in it. You have no say in it, and you have to be okay with it. There are some assets that have failed miserably and underperformed. One of the assets that I invested in, they found a foundation crack 6 months into the owning the property. So all the reserves that were supposed to be capped, as well as all the cash flow that was supposed to be distributed, was not. And I have been in this investment for about 3.5 years. I have not received a single distribution. There is a pref, so eventually I'll be paying out, and I'll be paid out. And I've been keeping an eye on it. I'm receiving periodic updates. and the property was on sale multiple times, and it fell out of the contract multiple times as well. I'm still hopeful that I will exit because the valuations have gone up. It's a property located in a great market in Dallas. As we know, location is very, very important for real estate. Yeah. And you just have to keep an eye on it and don't get down on it, because, like I said, you know that there will be some certain investment that will underperform. Go ahead.
No, I was just going to say, so I love the fact that you're sharing that with us, because one of the things, Alex, I think we can tend to get lost in is that everything performs against the pro forma, and pro forma, just as it says, it's like this is a projection of what it should be or what it should do, but it almost never does exactly that. So just to hear that story from you, I think it really is helpful just to remind people, like, look, it's not going to always perform exactly that way, and even though it doesn't perform, I guess this is the other thing, is people are probably thinking, well, wow, you know what, Alex, like, foundational issue is pretty big. Like, that's a big deal. What could you have done as a passive investor to find out, or with that experience, like, what have you done moving forward to minimize those types of things that maybe most passive investors are not thinking about? Because foundation is a pretty huge deal.
Yeah, so I have developed, together with my business partner, a 101 question guide for passive investors, how to vet out the operator. What kind of questions you as a passive investor can ask before you make an informative decision, such as, how much skin in the game does the sponsor have? What's the risks? What are the biggest risks associated with owning the property? Did they know about that foundation issue? Obviously not, because if they did, they would probably not buy a $20 million building, right? But things like that happen. I mean, at that particular property, there is not much we could have done. I've done all the due diligence. I read out the operator. They had a track record. They were local. They were buying in at a very attractive rate going in. The business plan to look like some location is good. But nevertheless, there's a lot of questions that you can ask during your due diligence process, because you, as a passive investor, is betting on a jockey, per se, right? So your job is to find out an operator that has a track record that you trust, that their business plan, not yours, aligns with your vision. We underwrite our own deals as well. We ask for financials, but we also do our own underwriting to make sure that we're comfortable with the numbers and with the risks. Financial real estate is a numbers game, and you have to understand all the financials, the occupancy rate, the break-even point, the stress level. And all the risks associated with it. If anybody is interested, happy to share that guide.
Perfect. And we'll definitely give you the opportunity to talk to us more about that, how they can pick it up, and we'll include that in the show notes as well. But also, too, because we have people, that are interested, and you've just said that there's 101 different questions you can ask. Now, in order to invest, do all 101 have to be checked off, that you have the answer to all 101?
No, not really. I mean, this is just my personal preference. Do we ask 101 exactly questions? No. With certain operators, we developed relationships, and we have co-invested with them into multiple projects. But do I recommend for a new investor to ask as many questions as they can? Absolutely. Because there's a lot of times you just don't know what to ask. You don't know what you don't know. And the more clarity and transparency that you have for yourself, the easier it is. Keep in mind that most operators are looking for passive investors. They're looking for capital. Some of them are transparent, some of them are not. And we just think that this guide helps you to get started. And then you'll get better over time as you start your investment journey.
Yes, and I just want to reiterate that for the Going Long family. One of the things that Alex is mentioning, it is like, and I asked the question kind of as a joke, but you do not have to have every single question answered, because you're going to have to act on imperfect information at a particular point in time. Like, there is nothing that is perfect. But what Alex is providing you is the opportunity, especially for those of you who have not gone through this before. He's giving you the opportunity to understand 101 different questions from someone who has himself and his partner invested in over 4,000 doors of passive investments. Like, I think this is something that's going to be a lot of value for you. At the same time, you will still be in a point where you don't have all of the answers. And so you're going to have to make the choice that every question that you ask, even though the one that you don't want to ask are usually the ones that you should ask, when you see them on that paper, ask the question, and then realize when you're trying to take action, you're not going to have every single answer to every single question. But you do need to be able to sleep well at night. Do not do something if you're not completely comfortable with what's going on in an investment opportunity. You talked about Wall Street earlier, Alex, and I work for a really big IT company, right? I work with a lot of really high paid professionals, super busy in very demanding jobs. And there's this thing called real assets. And then there's this thing called Wall Street, paper assets, fast, easy, in, out. Like, when you are talking to people, like, and they think, well, why real estate instead of Wall Street? Because it's super fast. Like, what do you what questions do you normally come up with, or what responses do you have, or I guess what led you into real estate and away from Wall Street?
Sure. No, that's a good question. So if you analyze wealthy people, in fact, we recently did a survey of our investors, as well as observe what everybody else is doing. If you look for people that have very high net worth, they have multiple income streams, and they allocate a lot of their portfolio, more than 25%, to real estate for a number of purposes. Number one is the tax advantages that real estate provides, including 1031 exchanges and tax efficiencies, where you can receive a consistent monthly or sometimes quarterly cash flow that is tax efficient because of the tax write-offs that is able to provide, right? And our company is Wealthy Mind Investments. Is the name was born because we believe in wealth as a vehicle. Real estate is just a vehicle to achieve wealth, so you can enjoy your life and live life on your own terms. And when you're in the corporate world, obviously your income is probably pretty high because you earn it, you have experience in doing that, but you have no freedom. You're still tied to a paycheck, which is the moment it's taken away, you have no income. And real estate is a vehicle to build that income, to build that monthly or quarterly cash flow, so you don't rely on just a job. Again, if you closely monitor and explore a lot of uber wealthy, they allocate certain position in the portfolio to real estate. They also have stocks that are liquid, that you can, like you mentioned, go in and out. And they also allocate certain percentage of their portfolio to private equity. This is why we decided also to branch out and involve our investors not only in real estate, not only in the stock market, but also in pre-IPO companies that have potential to go 2x, 3x, or even 5x. So having those multiple investments provides additional diversification. That way you're protected from all the market's ups and downs, and you are in the game. You're in the driver's seat of building wealth and not relying on just one source of income.
Yeah, and I love how you talk about that, because really you're looking at the different ways that you can formulate your portfolio. You have a portion that is there, which are equities, and you have a portion which are generating and creating cash flow, and then you have a portion which can be really asymmetric risk, where you're talking about really looking at massive multiples and things like that. But ultimately, and coming back to the Wall Street example, of course, there are some types of stocks where they are creating cash flow. the difference is, and many of the times and I'm sure you've had the same conversation, Alex, is you have to be actively looking to get in and out of creating your cash events in the stock market. Whereas typically with your real estate, it's paying you over time no matter what you do. Right? It doesn't mean it's going to happen every single time, but it is constantly pumping out cash flow. Like literally you're getting a check. You don't have to do anything. You don't have to ask for it. It just shows up. Versus the stock market, if you are typically there, you actually have to go over, have somebody sell, buy, and really be active in it.
Yeah, that's true. I mean, you, technically speaking, you could buy dividend stocks, including REITs, and be a little bit more passive, but then there is no tax efficiencies. Right, so those companies or investments such as REITs will not provide K1s, which will have passive losses. A lot of W2 busy tech professionals do not realize that. So on paper, it looks nice, and there is also volatility involved, as we know. There's almost no volatility when you invest in stable, cash flowing real estate assets. Can you lose money? Absolutely you can, but the chances of that from a risk perspective are just very, it's an unfair advantage, right? So we're buying something usually at a discount at off market, and we're reducing volatility tremendously with doing that. I mean, historically speaking, commercial real estate such as apartments has done really, really well. And the volatility has reduced by more than 100% in many times.
Yeah, and I love the way your mind thinks, Alex, because you mentioned the tax benefits, and this is one of the things I constantly am talking about as well, right? But just you mentioned that you're getting into a tech fund, and I've recently gotten into the energy space because I'm helping people that are in the same type of people that we're working with a lot of times that are creating big earned income, and they've created these passive losses, and we finally figured out a solution to be able to help high wage earners create returns like through an accredited 506c, and at the same time help on active income. And so it's a very similar approach where you're looking to solve problems. You're looking to help people understand the true complexity of what comes with just a paycheck, and you're finding solutions. And I love the fact that you are doing that. It's very much in line with the types of things that we like to do as well, is look for solutions to specific problems. And speaking of which, like you mentioned earlier, your 101 questions that you can ask. I want to find out more about Wealthy Mind investments, and also I'm really curious when you think about your greatest strength, and I think about you've invested in over $4,000 passively. Like that's amazing. And so many people that are in these high tech jobs and busy. Like, what would you say is your greatest strength that's helped you to get positive forward-moving results?
I think having the positive mindset, you can get down on yourself. I think we all know there's a lot of ups and downs in our lives, including the careers, and just having that positive mindset has helped me a lot. I also consider myself a people person, so I reach out to a lot of people. I don't know everything. And I continue to learn and strive to get better each and every day.
I love that. And so once again, the humbleness, the humility of being able to recognize that you don't know everything, also the desire to reach out and work with and learn from other people is fantastic. Alex, one of the other things that is really interesting here, right? I mentioned before, like you've invested in over 14 states. You live in Silicon Valley. This is the Going Long podcast. Like we love being able to recognize people that invest beyond your backyard. And so, but it's also one of those things that most people don't do. Like most people, when they're investing in real estate, they just want to invest where they live and they drive by the property every day and then they get a second property and a fifth property. So what also motivated you to, or maybe what that process was like, if you can go back to thinking, wow, I'm going to invest in something that I can't actually drive by and see every day. Like what was that process like for you?
Sure. Well, I'm not going to sugarcoat. It was not easy. I was stuck by paralysis analysis for some time because a lot of experts do recommend invest in your own backyard that you can touch, you can drive by the property. But I live in a very expensive place. Silicon Valley San Francisco area, the cash flow is just simply not there. And a lot of people do invest here locally. In fact, some people still continue to do flips. They invest in $1 million rundown house. They put in another couple $100,000. In addition to overbidding, usually there's overbidding on a couple $100,000. And then they try to sell and make a killing of another couple $100,000. But to me, that model is too risky. I've seen a lot of flips going bad, including myself. I did one. And I said, you know what, it doesn't work. My risk appetite is not at that level yet. And I started to explore, what else is out there. And I was stuck for a while. And I said, well, I just have to get over the fear and my uncomfortableness. It was investing out of state. Do I really need to be there and know that area physically? Do I need to know the area? I can use just Google. I can fly there and once to see what the property looks like to make sure that it actually does exist. I have a friend of mine who does a lot of flips for single family homes, and he goes to auctions and he recommends to everyone to fly there and see the property because there's a lot of investors buy properties that on Google Map exist. And then when you actually go there and drive, the Google map was not there, updated properly. So, you can buy property that does not exist as well. But when it comes to commercial real estate, that's unheard of. That's unusual, right? So after some time, I got rid of that fear and uneasiness and started investing passively because real estate, as I mentioned earlier, is a numbers game. Yeah. If the particular asset cash flows, and you have a strong team of operators that are local with a strong track record, and then you follow the trends in terms of migration, in terms of jobs, schools, crime, you probably have enough of information to pull the trigger. Don't let that paralysis analysis get to you, so you get stuck and continue to analyze that, especially for somebody like me who lives in an expensive place, that you just limited to investing out of state. If that is your strategy, right? If you're okay with flipping homes, if you're not into the cash flow and the passive investing, then maybe a local market is good for you. But if you live in a high and expensive place like me, and I know a lot of other people in New York, Los Angeles, Boston that experience the same problem, and it doesn't limit them anymore after that mental block. It is a mental block. Every person goes through that, but it's up to you whether you let that mental block get to you or you get over it and start investing like a lot of experienced investors do.
Yeah, I love that you shared that with us once again, Alex, because it's one of those things where you can get stuck in paralysis analysis. It is definitely not easy the first time that you do it because you're unfamiliar with doing it, and it goes against what everybody else has been told. And so, I've never purchased a property in Spain where I live. I've only purchased in the United States from Spain. And so one of the things that Alex just mentioned is, if there can be an advantage, and I think the biggest thing is what Alex talked about is you have to have a team in place, right? What allows me to purchase properties or invest in pieces of energy equipment or whatever is because I have a team that's in place, and my team understands the local location. My team understands the players, and then I get a chance to vet with my team the specific opportunities. So long distance investing is really about making sure you have the right team. And also what Alex talked about is being able to ask all the questions so that you feel comfortable to do that. And he's even going to be kind enough to give you his 101 questions that you can ask if you don't know which questions to ask. So that's fantastic. Listen, Alex, before we get ready to go to the Going Long Final 3, I do want you to tell us and hopefully you're watching us on the video version, because Alex has this really awesome background that talks about Wealthy Mind Investments. So help us understand a little bit about Wealthy Mind Investments. Who are you working with typically? I know you've talked a little bit about it, but if you could give us like a minute and 30-second overview of what Wealthy Mind Investments is all about.
Sure. So Wealthy Mind Investment, again, we believe in the mindset. The wealth starts in your mind. And having said that, we believe that busy professionals deserve to have opportunities in their daily life. They're very busy and they don't have time to wealth building strategies. So we find these opportunities and present them to our investors that create wealth, that attract wealth to them, and ultimately they can enjoy and live life on their own terms. We invest in cash flowing multifamily opportunities. We're exploring other alternative assets, such as storage units, mobile home parks, even hotel conversions as well. And in addition to that, as I mentioned, we are in the pre-IPO tech space as well.
Wow. Okay. That's fantastic. And I know and we'll talk about your website earlier, but you can go over there. There's lots of information. It's very well laid out and gives you really clear visibility into the things that Alex and his partner are working on and doing and have done, which is a good thing. So Alex, the thing is, it's time to get to the going long final three. This is a lightning round. And the thing is, I never ask the going long final three unless you tell me that you're ready to ask or for me to ask you. So are you ready?
Let's do it.
All right, here we go. Perfect. I knew you'd say that. So listen, we started with you over in the United States, out in Silicon Valley, and now I'd like to bring it back this way to Europe because that's where I am. Help us understand, what is your favorite European city, either that you visited or still on your bucket list to visit?
Sure. Well, luckily for me, I have traveled a lot. Originally, I'm also from Ukraine, Europe. And one of my favorite cities is Barcelona. I love Spain. It's an amazing city. I mean, the architecture is Gaudi is just out of the world. And I'm a big soccer fan. I love the matches between Barcelona and Real Madrid. I used to be a Ronaldo fan.
Really? Oh, okay,
cool. I love Messi.
Yeah.
I love Messi as well. I know they're not going through. They're going through some tough times, but I know they'll bounce back. And just the city, the vibe. It's on the beach. I love the beach as well. The food, the culture. It's pretty amazing. So I drank the water from the downtown fountain when I visited 2-3 years ago. So I'm definitely going to be back. I don't know when, but I'll definitely be back. It's probably one of the best cities, most beautiful cities that I've ever seen.
Well, I would agree with you. Thank you for another vote for Barcelona. And you know what, Alex, when you're on your way over, don't forget, we need to get in touch in advance, and we'll go out and we'll have a nice lunch, dinner, or something like that. So we may even go drink from the fountain again. So question number 2 is, really successful people have, one of the great things about them, and you are a successful person, is that you've only made one mistake in your entire career. I get that wrong every time. I get it wrong every time. All right, so you probably made lots and lots of mistakes or had learning opportunities or however you want to call it, Alex. But the important thing that I'd really love for you to share with the Going Long family, in a relatively fast way, is what is the one lesson that you would pay forward to the Going Long family today?
I think a lot of people actually don't take time to analyze their mistakes. I think doing that self-analysis and reflection in terms of what could you have done differently is very important. A lot of people just move on. I'm just going to take massive action. Well, sometimes it's good to slow down and go internally deep. Maybe take a day off or go out of town especially when it comes down to your major setbacks, because your life and your career is not going to go just up. We all know that. There's a lot of ups and downs. So it's important to sometimes slow down. I'm a big action taker. I believe in that. But, my younger version did not do that whole lot. And I could have done and pivoted into many more other opportunities and directions. So now that I'm a little bit older, sometimes I take time off and slow down and go internally deep, meditate a little bit, just contemplate until you chart a new direction.
Yeah, I love that. Just really taking the time to stop, analyze, especially on those big decision points or big issues or that are challenges that have happened. So love that. And this takes us to the final three of the Going Long final three, which is, and I know this is something that you love doing because we're talking about Wealthy Mind here, is what book would you recommend to the Going Long family?
One of my all-time favorites is Napoleon Hill book, Think and Grow Rich.
Yeah.
It's a success Bible that I've been reading and rereading for more than 25 years. And I continue to find nuggets. I'm a strong believer that it all starts with the mindset. If you don't believe in yourself, if you don't believe that you will attract whatever you're pursuing, then your chances of succeeding are almost non-existent. So if you don't have that taken care of, then your chances of success are very slim.
All right, perfect. So we'll include that. Think and Grow Rich as well. Napoleon Hill, been fantastic. And as I just start to think about our conversation, Alex, I mean, we talk about everything from, and I know I mentioned it earlier, but you emigrating from the Ukraine to the U.S. there with family who'd been there. I mean, you've been there for 25 years. Your family's already been there for 40. You have 2 children. You've now made a life for yourself in Silicon Valley. You recognize that there was something more beyond just having that single stream of income. You found real estate. You really took a massive action, over 4,000 doors we've already talked about. Now you realize that there's another way that you can also serve other people, and that is really taking more of a leadership role in these types of investments as a general partner. You're continuing to educate us. You've helped us with so many different things in different areas and aspects to think about as we look at investing in real estate. And you've even talked about like a 101 questions that people can ask, the questions that they don't know how to ask or what to ask. And so all these different nuggets that you've shared with us, I know that there are so many people that are part of the Going Long family are thinking, I got to get in touch with Alex now. Like, I've got to call him. I want to get in touch. I want this list. Help us understand, what is the best way for the Going Long family to learn more about you and what you're doing at Wealthy Mind Investments?
Yeah, happy to help anybody who is interested in getting started and explore more about how we do due diligence or get on a list of deals that we personally invest in. My website is wealthymindinvestments.com. And if you'd like to have a guide, you can email me at alex@wealthymindinvestments.com and just include in the subject line 101 questions guide for passive investors, and I'll reply back with the guide.
Fantastic. Well, Alex, thank you very much, and we'll include both of those in the show notes. And I would say everyone in the Going Long family, reach out to Alex. He's shared so much knowledge and so much information, and because of that, Alex, I just want to thank you from the bottom of my heart for investing your time with me and the entire Going Long family today. Thank you so very much.
No, thank you for the opportunity to sharing my story. I appreciate that, and we all know real estate is a team game, so let's all grow together.
Yep. All right. Sounds fantastic. Well, thank you very much. And then, Alex, if you give me just a couple seconds, because I want to thank the Going Long family for investing your time once again with Alex and I. I mean, he left you so many different nuggets that you can now take away. They're very actionable. He's even offered to give you a list of 101 questions that you can ask. I would definitely recommend that you take him up on that, especially for those of you that are getting started, or even if you're already there and you're looking to do something else. So, and specifically, like, you can share today's episode with 2 to 3 other people. And by sharing with 2 to 3 other people, you have an opportunity to really take a leadership role and help those other people that are interested in real estate and the things that Alex talked about today. And you also help to attract other people, like-minded people, to our community. And the other thing I would love to have you leave is an honest review. What did you think about today's conversation? What things did you love that Alex shared today? What things did it also spark interest in? I go through each one of these reviews, and it's something that I use to make sure that we're continuing to bring you as much value as possible in today's podcast and in every single podcast. So I guess I'm super excited. Well, I know I'm super excited to welcome you back on the very next episode. And until then, I want you to go out and make it a great day. And we will see you next time. Thank you very much. Wow. Don't you love hearing from top-notch experts in the field? When I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long-distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.